Breakfast Club, speaking with Paul Ho. Paul is the CEO of iCompareLoan.com. We were talking about Enbloc fever and its downside. Now we're talking about inheriting a property with its downside as well. If you have a question for Paul, you want to clear up mortgage-wise, give us a call, 669-11938. Paul, welcome back into the Breakfast Club. It's not all smooth sailing if you inherit property from your parents as well.
Yes, that's right.
What could be a downside of a particular property?
Say, for example, your property has an outstanding loan, and if you inherit a property from your parents, then what would happen in that case would be you would inherit the property as well as the loan, outstanding loan.
Okay, which you would be liable for for as long as it takes to unload the property.
Yeah, it could be. I mean, if it's a HDB, then obviously, and if you stay in a condominium, you have to, the downside would be that, I would have to unload this property within a fixed period of time, typically within 6 months to a year.
Right.
If you are not having a property and you inherit a property, for example, condominium, and when you take over this property, you have the asset as well as the loan, and then the bank will say that, you have now changed the borrower, something of a material change, right?
Right.
So you change the borrower. So if the new borrower is incurring this debt now, is this new borrower able to finance the outstanding loan and carry on the ongoing liabilities and servicing?
Forgive my ignorance. After a person passes on, they will particular property, perhaps to their descendants. Does this, in the process, do you not have to open an estate account? Can the estate account not finance the current liabilities on the property?
Technically, yes and no. Okay, what happened is you do not immediately get all the money up front, right?
It takes a while.
It takes a while, and it takes a long while. I mean, 2 years ago my uncle passed away, or maybe 3 years ago my uncle passed away, and it took almost like 12 to 14 months to sort out the money. So during this time, my father, who took over the property, had to continue paying, not only just servicing, it was fully paid, but he has to service all other incidentals, getting the lawyers, doing this, doing that.
While this is going on, there is your utilities charges and things of that nature if you're not cutting it off altogether.
Exactly. Utility charges, mortgage financing cost, the monthly repayment if you haven't paid up your outstanding loan.
And the monthly dues of the condominium, or
exactly. So what happens that it's like knowing that the fire engine is just two streets down the corner, but you're having a raging fire here. You said you just can't. You just can't wait for the fire engine to arrive.
I like the analogy of virtual currency. It's there, but you can't touch it, see it, or feel it.
Yeah, your virtual currency is coming in a year's time, right?
Indeed.
Yeah, that's right.
So, given that scenario, that is for the private, is there a problem with the HDB? Primarily, if I own something else and I'm being willed this thing by no fault of my own, am I supposed to dispose of my current HDB, or am I supposed to dispose of the property that I have technically inherited?
Okay, if you have no property, if you inherited a property that's fully paid, then there's no issue, right? And of course, if it's HDB, then you have to meet HDB eligibility criteria.
Right.
But if you have a private property and you inherit a HDB property, then you would have to sell one of the HDB property, the one that you inherit typically. Right. So if you have a condominium or another HDB, you obviously can't own two HDB, because the HDB requirement would be for you to have a family nucleus, right? Family nucleus means husband and wife, husband and children, children and children, or the wife and children, right? Or remaining surviving.
Sounds like you have a gun to your head when something like this happens. Some people look at it as a gift, a very substantial gift. Others might find like it's an albatross around your neck.
Yeah, I mean, it's never good to receive this kind of money, because it means a loved one has departed.
Of course, yes.
And on top of that, before you can even come to terms with all these things, you're being hit with a number of issues, right? So for HDB, it's still okay because you are being asked to buy the mortgage insurance, mortgage protection by requirement by HDB. If one or two of the parties passed away, then you would be able to pay up the outstanding loan.
Is it different in the private sector? Can I hedge? It's not a bet. Could I hedge my liabilities with some form of assurance?
Yeah, you can buy a mortgage reducing term assurance.
Okay.
In short, MRTA.
And you're going to tell us what that means.
Sure. MRTA stands for mortgage reducing term assurance. It is basically buying an insurance on the amount of money that you owe from the housing loan, right? You cannot buy more than that. If your housing loan is $1 million, you say, "Hi, can I buy $3 million?" No way, you cannot, right? It's not for you to make. It's not for your offsprings to make a fortune, right? It's just you can buy the same amount.
The payments that happens if someone.
So the coverage also drops as you progress into the loan tenure, right? For example, after 10 years, 15 years, it becomes $500,000 or 400,000. So
it's decreasing.
It's decreasing coverage, right? But the premium is still fixed, right? Upon the time when you take it on. So the premiums are typically not that high. So it could be like for $1 million premium. For 30 years mortgage reducing term assurance, the premium could be in less than $1,000 if when you're like 30 plus years old.
So when you do so, how popular is this sort of insurance? Or Singaporeans always feel that after every 5 years I need to move to someplace new?
Actually, the mortgage insurance stays with you. It stays with the person. It doesn't stay with the house.
Right.
So if you move house 100 times, it doesn't matter because that insurance stays with you.
How popular is this particular form of insurance?
I think it's probably not that popular. I think.
Do people even know about it? Well, you know about it now. We're keeping you in the know on the go here on 938 now. So the popularity. Would you deal with loans? I think in this particular scenario, probably making money hand over fist. But let's talk about when someone approaches you to get some form of financing for a property. Do you advise them to get this sort of an insurance policy?
I do not actually advise for or against. I tend not to talk about this because people, these days, right, you will have, it's like you will easily have 10 friends who is a property agent and you have another 10 friends who is a financial advisor, right?
And all hovering like hawks in the hope that you will engage them for their 1%.
Yeah, I mean, it's competitive, right? So everyone knows everyone who is a property agent or financial advisor. So I do not see a particularly strong need to inform them. But if their liability is very high, for example, if they suddenly buy a property that is $4 or $5 million and they incur $2-3 million of outstanding loan, and I would particularly tell those people who has only one single income. For example, if the husband is working and has a very high income, but the wife is a homemaker and is not working, then I would say, would you like to buy something because this is an additional liability in case you accidentally no longer exist, then do you have the spare funds for your wife to take care of the children and to pay for the outstanding loan without having to move house, right? Similarly, if the reverse is true, where the wife is working, the husband is maybe a little bit not so employed, usually could be in between jobs or things like that. So I would advise this kind of couples to look at it.
We are talking about the proceeds of Enbloc sales and the proceeds from inheritances, primarily the downsides, and if you can at all mitigate your liabilities should this fortunate or unfortunate incident occur in your lifetime. Give us a call, 669-11938, if you want to get in on the conversation. We are speaking with Paul Ho. Paul is the CEO of iCompareLoan.com, We've got another segment for you. Keep it right here on 938 Now, hoping to keep you in the know and on the go. I'm Keith D'Souza. Stay with us. Good morning.
The Breakfast Club.